People ask me a short question all the time. They say, if you lost everything and had to start today, what would you do? It is a fascinating question because it reveals what people really want. They are looking for a secret. They are looking for a trick. They are looking for a shortcut. They hope I will reveal some hidden loophole that lets you bypass all the hard work and get rich fast. But that is not the plan I give. It is about building a solid foundation first, so that when you take bigger swings later, you are protected. It allows you to build real, sustainable wealth, the kind that lasts a lifetime. More importantly, it teaches you the skills and discipline to keep it. This essay explains the 5 phases of that plan. Each phase has one main goal. Each phase has one simple strategy. Each phase has a few clear moves you can make. You can use this plan if you are starting with absolutely nothing. You can also use it if you have some money saved up but feel stuck. The principles are universal. They are not about picking the right stock. They are not about timing the market. They are about controlling your own financial destiny, one phase at a time. The beauty of this plan is its simplicity. You do not need a PhD in finance. You just need to be disciplined. You just need to be consistent. Read this guide slowly. Absorb the concepts. Then, pick one small actionable step and do it today. That is how real change begins. The 5 phases are simple to remember. First, you build your optionality. Second, you make the leap to cash flow. Third, you become unemployable. Fourth, you start making asymmetric bets. Fifth, you become anti-fragile, protecting what you have built. Each step builds on the last, creating a powerful momentum that carries you toward your goal. This is not a get-rich-quick scheme. It is a get-rich-for-sure plan, for those who have the patience and the discipline to see it through. Let's begin with the first and most critical phase of the journey. The objective of Phase 1 is simple: survive and learn skills. This is the bedrock upon which your entire financial future will be built. Too many people get this part wrong. They are impatient. They hear stories about 19-year-old founders raising millions and think that is the only path. So they quit their job, drain their savings, and chase a big, risky idea before they are ready. More often than not, they fail and end up back at square one, but with less money and more debt. Do not do that. But in Phase 1, it is not a trap. It is a launch pad. It is the secure base from which you will launch your future ventures. Living below your means is the most critical action in this phase. This does not mean you have to eat ramen noodles every night or live in a miserable state. It simply means you must consciously and consistently spend less than you earn. There are simple, practical moves you can make. House hack by getting roommates to cover most of your mortgage or rent. Buy a reliable, used car instead of a new one. Learn to cook simple, healthy meals at home instead of eating out. The goal is to create a significant gap between your income and your expenses. Your target should be to save at least 30% of your after-tax income. If you can push that to 40% or even 50%, you are accelerating your timeline dramatically. This high savings rate is not about deprivation. It is about buying yourself freedom. Every dollar you save is a vote for your future self. It buys you time. It buys you choices. This pool of savings becomes your optionality fund. It is the money that will allow you to take calculated risks later on, without risking utter ruin if something goes wrong. This phase is the least glamorous, but it is the most important. While you are building your savings, the second part of Phase 1 is to relentlessly acquire skills. Your day job pays the bills, but your after-hours learning builds your future. The goal here is not necessarily to start a full-blown business yet, but to experiment and learn. Start a small side hustle. Focus it on skill acquisition, not just extra cash. Try things that expose you to the fundamentals of business: sales, marketing, negotiation, customer service. Offer simple services. Freelance, writing, graphic design, online tutoring. Become a voracious reader. Read 1 or 2 business books every week. Don't only read startups and VC. Read classics on sales, spin selling. Read Marketing, Influence by Cialdini. Read about people and management. Absorb how money psychology and business intersect. This knowledge gives you mental models and frameworks for your career. The money from a side hustle is secondary to the education. I remember being in this phase, working full-time, living with 3 roommates in a tiny apartment to keep costs absurdly low. Every night I skipped TV and spent hours reading and testing ideas online. I started a blog, I sold a small ebook, I took tiny consulting projects. Most attempts made almost no money. One project made $475, but the lessons were invaluable. I learned to write copy that sells. I learned to build a website. I learned to talk to customers. High savings, plus skill acquisition. Mine, optionality. After a year or 2 of this discipline, you're in a powerful position. You have a cash cushion. Not desperate. You have real-world skills tested in the market. You can say yes or no based on merit. You have freedom to try again without paralyzing fear. You can sleep soundly knowing you can try again if the first idea fails. The objective of Phase 2 is to replace your W-2 income with business income. This is the moment you make the leap. You have built your optionality fund, you have honed your skills, now you are ready to transition from employee to owner. The fear is immense, but your preparation in Phase 1 makes this a calculated risk, not a blind gamble. Your savings act as a runway, giving you 6 months to get your business off the ground, 12 months or even 18 months to get your business off the ground. This financial buffer is the difference between a panicked, desperate attempt and a calm, strategic execution. The main strategy here is to start a low-capex business. Low-capex means a business that does not require a lot of upfront capital. Avoid business models that require you to buy expensive machinery, sign a long-term lease for a big building, or hold a lot of physical inventory. Laundromats, car washes, certain types of real estate can be fantastic cash flow generators later on. That makes them too risky for your first major venture in Phase 2. Your goal is to minimize your initial cash burn. Focus on service businesses where you are selling your skills, your knowledge, your time. Digital marketing agencies, consulting services, copywriting businesses are perfect examples. You can start these from your kitchen table with little more than a laptop and an internet connection. The primary goal is to build consistent, predictable cash flow. Cash flow is the lifeblood of any business. It is the money that actually flows into and out of your bank account each month. You need to become obsessed with generating positive cash flow as quickly as possible. This is what will sustain you and your business. Use the savings from Phase 1 as your personal and business runway. If your first idea does not gain traction within a few months, you have the financial stability to pivot or try a completely new idea. This is why Phase 1 was so critical. Without that runway, a single setback could force you to give up and go back to a traditional job. But with it, you have the resilience to withstand the early challenges of entrepreneurship. Remember, the goal in Phase 2 is not to build a billion-dollar unicorn. The goal is to build a machine that replaces your old salary. Building your first real business requires a shift in mindset. You are no longer just experimenting. You are building something that needs to survive and thrive. The first and most important move is to start with your clients. Do not build a product or service in a vacuum, then don't just hope someone will buy it. Go out and talk to potential customers first. Identify a painful, urgent problem they have, that they are willing to pay to solve. Your service should be the direct solution to that specific problem. Your first few sales are proof you have a viable business idea. Once you have paying clients, obsessively keep costs low. This is not the time for a fancy downtown office, expensive software subscriptions, or a large team of full-time employees. Work from home, use freelancers and contractors for tasks you cannot do. Barter for services when possible. Every dollar you save on overhead can be reinvested into growth or added to profit. Scrutinize every expense. Ask, is this essential to deliver value and generate revenue? If not, cut it. Track every dollar with meticulous care. Know your numbers inside and out. At minimum, a simple profit and loss statement reviewed every month. How much revenue did you bring in? What were your exact costs? What was your net profit? It's not complicated accounting. You can do it on a simple spreadsheet. The objective in Phase 3 is to solidify your foundation and achieve true freedom. By now you have a business that generates consistent cash flow and has successfully replaced your old salary. The temptation is to keep pushing for growth at all costs. This is a trap that many entrepreneurs fall into. They pour every dollar of profit back into the business, chasing ever higher revenue numbers. This creates a fragile enterprise that is always one bad quarter away from collapse. In Phase 3, you must shift your focus from growth at all costs to profitable growth. The main strategy is to run the business for cash and build systems that allow it to operate without your constant, hands-on involvement. Profit is the ultimate buffer. It is what saves you during a recession. It is what funds your investments. It is what gives you the freedom to take a vacation without worrying that the entire company will fall apart. Start by paying yourself a steady, reasonable salary from the business. Then, aim for a healthy net profit margin on top of that. This excess profit is no longer just for reinvesting in the business. It is your wealth-building engine. This is the phase where you make yourself unemployable. This does not mean you are lazy or that you stop working. It means you are no longer essential for the day-to-day operations of the business. You achieve this by documenting your processes and hiring smart people, especially managers, who can run those systems. Create standard operating procedures for everything. How you acquire new clients, how you onboard them, how you deliver your service, how you handle billing. When the systems run the business and people run the systems, you can step back and focus on strategy, not tasks. A major milestone in this phase is seeing your personal net worth cross the $1 million mark. This is not a magic number, but it is a significant psychological and financial turning point. This wealth is not built through some secret investment trick. It is simple math. Your business is now profitable enough to pay your salary and generate a surplus. You take that surplus cash and begin to invest it systematically. You are not making wild bets yet. You are building a solid, diversified foundation of assets outside of your primary business. This is how you start to truly de-risk your life, breathe a little easier. The key moves in Phase 3 are all about building a durable, resilient enterprise. The first move is to relentlessly focus on profit margins. Instead of just asking, how can we grow revenue? Start asking, how can we increase the profitability of each dollar of revenue? This could mean raising your prices. It could mean finding efficiencies to lower your cost of delivering the service. Or it could mean firing unprofitable clients who drain your time and resources for little return. A business with high profit margins is a fortress. Once you have a profitable, systemized business and a growing personal investment portfolio, you can enter Phase 4. The objective here is to, intelligently accelerate your wealth creation. You have a strong foundation. Your core financial needs are met. You have a surplus of cash flow from your business that is not needed for operations or your lifestyle. This excess cash is your risk capital. You can now afford to take some calculated shots at much larger outcomes. This is the phase where you can realistically aim to go from a net worth of 1 million, 2 million, to 10 million or more. The strategy is to make a series of asymmetric bets. This term sounds fancy, but the concept is simple. An asymmetric bet is one where the potential upside is many, many times larger than the potential downside. If you invest 50,000, your downside is limited to that 50,000. But if the bet works, the upside could be 500,000, 1 million, or even more. The key is that you are not betting the farm. You are using a small, controlled portion of your excess capital to take swings at home runs, while the vast majority of your wealth remains in the safe, boring investments you built in Phase 3. The best asymmetric bets are usually found within your own circle of competence. Your knowledge gives you an edge. If you have spent the last 5 years running a successful digital marketing agency for plumbers, you have deep industry knowledge. You understand their problems, their customers, and their business models. So, a good bet for you might be to invest in a new software startup that helps plumbers manage their scheduling. Or you might acquire a small plumbing supply company. You are not just a random investor, you are a strategic one, leveraging your expertise to spot opportunities others might miss. You should aim to make 5 to 10 of these bets over a period of several years. You do not need all of them to succeed. In fact, you should expect most of them to fail. That is the nature of high-risk, high-reward ventures. But you only need 1 or 2 of them to work out in a spectacular way. A single big win can have a transformative impact on your net worth, far outweighing the small losses from the others. The key moves are to use small stakes for each bet, thoroughly vet the people and partners you are investing with, and never ever risk the money your family depends on. After the intensity and risk-taking of Phase 4, you must change the game again. The objective of Phase 5 is to protect the wealth you have created and build a lasting legacy. your focus shifts from wealth accumulation to wealth preservation. This is about becoming anti-fragile, not just resilient to shocks and downturns, but potentially able to benefit from them. You have won the game, now you need to make sure you do not lose it. The biggest mistakes at this stage are driven by ego and greed. Trying to get even richer when you already have more than enough. The primary strategy is to de-risk and diversify. Move capital out of active, concentrated bets, like your primary business, into a broad portfolio of safer, passive assets. Traditional asset allocation becomes paramount. Diversified mix. Global stocks, low-cost index funds, bonds, real estate, other long-term assets matched to your goals and risk tolerance. The goal: steady, reliable returns that outpace inflation and sustain your family for generations. Build systems for your family. Teach sound financial habits to the next generation. Give them enough money so they can do anything, but not so much that they do nothing. Have open conversations about money. Set up trusts and legal structures. Instill hard work and discipline. Legacy's not just money, it's purpose and capability in your heirs. Wealth preservation involves legal and tax planning. It doesn't have to be complex. Work with qualified professionals, an accountant, a lawyer, a financial advisor. Use simple tools like trusts to protect assets and ensure smooth transfer. Optimize your investments for tax efficiency. Ensure adequate insurance against catastrophes. You are now the steward of your family's capital. Humility and caution become your greatest allies. I will give you a personal story that shows these phases in action. Early in my career, I lived with 3 roommates to keep my rent incredibly low. I saved the majority of my paycheck from my tech job. Every night, I would come home and spend hours reading books on psychology, sales, and online business. I started a small blog as a side hustle to test my ideas. After 2 years of this, phase 1, I had saved a substantial amount of money and learned the basics of online marketing. I then took the leap, phase 2, and started my online business full-time, using my savings as a runway. At first, I had just one product and a handful of customers. I focused obsessively on making the business profitable each month, paying myself a modest salary. Phase 3. After about 5 years, the business had steady, significant cash flow and systems that allowed it to run without me. I used the surplus cash to invest in boring index funds and also made a few small, strategic investments in other businesses. Phase 4, one of those small bets, an investment in a software tool that complemented my business, paid off handsomely. That single win dramatically changed my net worth. Now, I am largely in phase 5, moving money into safe, diversified funds and focusing on work that I truly enjoy. The steps were small, boring, and steady. People always have questions. How long does this take? Realistically, for most people, this is a 10 to 30-year journey. You can accelerate parts of it with intense work or a bit of luck, but you should plan for the long haul. What if I fail? Failure is built into the plan. That is why phase 1 and your savings runway exist. They allow you to fail, learn from it, and try again. Don't quit after one setback. Do I need to be a financial genius? No. You need to be disciplined, not a genius. The habits are simple. Spend less than you earn, save automatically, and continuously learn. What about taxes and legal stuff? In the beginning, keep it simple. As your wealth grows, get basic advice from an accountant and a lawyer. The cost of good advice is tiny compared to the cost of a major mistake. Stammer die, inabwannerby. Plan. Boring, because boring works. Flashy. Exciting plans are usually just gambles. The slow, steady, proven path is the one that actually builds lasting wealth. Let's recap the entire journey. It is a clear 5-step path that anyone can follow with discipline and patience. It is not a secret or a trick, it is a proven framework for building wealth from the ground up designed to be both effective and resilient. Each phase has a distinct purpose and builds upon the success of the last, creating a powerful momentum that carries you toward financial independence and beyond. This is the blueprint I would follow if I had to start over from zero today. It is the same blueprint countless successful people have followed. Here are the 5 phases one more time. Phase 1. Build optionality. Get a stable job, save 30 to 50% of your income, relentlessly learn valuable skills. Phase 2. The leap to cash flow. Start a low-capex service business, use your savings as a runway to replace your W-2 income. Phase 3. Become unemployable, focus on profit and systems, build your business to run without you, cross the 1 million net worth threshold. Phase 4. Make asymmetric bets. Use a small portion of excess cash for a few high-upside investments in your area of expertise. Phase 5. Become anti-fragile. Shift focus to wealth preservation, diversify into safe assets, and build a lasting legacy. This path is simple to understand. It is, however, difficult to execute. The real work is not in some brilliant strategic insight, but in discipline. Daily, weekly, monthly. It is choosing to save when you could spend. It is choosing to learn when you could be entertained. It is having the courage to take a calculated risk and the humility to protect what you have built. The wins do not come overnight. They accumulate slowly over years of consistent effort. If you're ready to stop looking for shortcuts and start building something real, then your work begins now. Do not get overwhelmed by the entire 30-year plan. Just focus on the very next step. Pick one small action you can take today to begin phase 1. Set up an automatic transfer of $50 a week. Go to the library and check out one business book tonight. Make one phone call to ask a friend about a potential side gig. Start with one small, boring, and powerful step. Start now. And then keep going. The summary. Work for someone. Build cash flow. Focus on profit. Make big bets. Protect the legacy. This path is proven. It just requires you to actually do the work. If you're ready to start phase 1, hit the subscribe button and let's get to work.